people log on. Welcome today. My name is Kara Wilkins, and on behalf of Bank on Arkansas and Arkansas Asset Funders Network, I'd like to welcome you to today's Family Economic Resilience Summit. I don't think I have to underscore the devastating impact that COVID-19 has had on the physical, emotional, and financial health of Americans everywhere, and Arkansas is no exception. In fact, a recent joint poll by National Public Radio, Robert Wood Johnson Foundation, and the Harvard T.H. Chan School of Public Health revealed that around 61% of U.S. households with children report facing serious financial problems during the coronavirus outbreak. Issues include keeping up with children's education, depleting savings, paying credit card bills and other debt, housing, and affordable medical care. And these issues disproportionately impact communities of color the hardest. According to a Clinton School of Public Service poll, COVID-19 has impacted local nonprofit organizations significantly as well. More than 30% of nonprofits surveyed have reduced employee hours, while 15% reported layoffs. Without paid and trained staff, nonprofits may find it harder to provide essential support services, such as food and utilities assistance to families who need it the most. And so it is with this in mind that Bank on Arkansas Plus sought to bring together members of our coalition, including financial institutions, nonprofit organizations, and other leaders from across the state to engage in joint learning through today's facilitated conversations. While we won't solve all of the financial challenges facing families today, we want to use our time to discuss the economic impacts of COVID-19 on families, small businesses, and communities, as well as share emerging lessons, tools, and resources. We also want to advocate and support long-term financial stability policies that can help families weather the storm both during and post-pandemic. Also, today at 1 p.m., we will release the Arkansas Asset Funders Network Access to Capital report titled Capital, What Women Really Want, Building Arkansas's Women Wealth Through Business Ownership. Again, I want to thank all of you for joining us today to better inform the way that we support working families in our region. Before I turn it over to formally begin our program, I'd like to note a few housekeeping items. You may have noticed by now that you are on mute and your video is turned off. And so everyone will remain that way throughout today's conversation. However, the chat box feature is available, and we do encourage you to place any questions or comments there during and throughout our discussions. Additionally, you can find today's agenda and speaker bios, as well as other resources listed on our Family Economic Resilience webpage. And that link should be listed in your chat box. Next slide. Next slide, sorry. I'd also like to take a few moments to thank our event sponsors listed here, including our financial institution sponsors from Southern Bancorp, First Security Bank, Iberia Bank, and Arvest Bank. And they really helped to make today possible, so thank you. I'd also like to thank our program support sponsors, Cities for Financial Empowerment, the King Foundation, United Way, Heart of Arkansas United Way, and Arkansas Asset Funders Network. Next slide. And with that, I'd like to introduce John Rutledge, president of First Security Bank, which is one of our certified Bank on Arkansas partners, to provide opening remarks. We will then hear from our first panel speakers immediately afterwards. So John, I'll turn it over to you.
Welcome. Thank you, Kara. First Security Bank is pleased to sponsor today's summit. We thank you all for joining us. Before we begin with our first panelist, I want to offer some context for today's event and highlight our continued involvement in the support of Bank on Arkansas's program. The Arkansas Asset Funders Network is a chapter of the National Asset Funders Network, which is a growing network of national, regional, and local-based grant makers interested in leveraging philanthropy to promote financial opportunity and security for low and middle income individuals, and families. In 2018, Arkansas AFN established the Bank on Arkansas program in response to the financial challenges that many unbanked and underbanked families face in cities and towns across the state. Bank on Arkansas is an initiative to ensure that all Arkansans, especially those in low and moderate income communities, have access to safe, trusted, and affordable banking. That is primarily accomplished through helping families open certified bank on accounts, which offer several benefits, including no overdraft fees, a low monthly minimum, a debit card, and many other features. In addition to offering certified accounts, the Bank on Arkansas Coalition is comprised of nearly 60 organizations and community leaders who help connect individuals to certified bank on accounts in an effort to ensure the financial stability of Arkansans. As you all know, community banks are just a product of the quality and the people in their communities. And in Arkansas is just one big small town. At First Security Bank, we've had a long history of trying to help our customers and people in our communities achieve their goals and look forward to the future. But it takes a banking relationship and a bank account to get started. We're so grateful for the program and the product that it gives us this opportunity to open the doors to so many we have had trouble serving in the past. But let me tell you about our partner, Our House. I will never forget the first time I was able to take a tour of Our House and learn about what they do for the people they serve. One of my friends who was given that tour said, "John, what makes this place so different is it's not about a handout. It's about a hand up." And I truly believe that the Bank On product, along with the program associated with it, it is a hand up. It's not just a handout. And it takes a partnership of so many people across our state to help give the unbanked and the underbanked that hand up that they need. And First Security Bank is committed to stay a part of this program into the future for the opportunities it provides to so many that need it. And we appreciate that opportunity. I want to thank Arkansas AFN and Bank on Arkansas for inviting me to open today's summit. With that, I will turn it back to Kara to introduce our first panel. Thank you so much.
Perfect. Thank you, John. Those are such wonderful words, and we appreciate you all so much at First Security for everything that you've done since the inception of Bank On, so thank you. At this time, I'd like to invite our panelists to turn on their video. Perfect. Great. And so our first panel today is titled Building Household Economic Resiliency as a Result of COVID-19. And I'm joined by Boshara, Director at the Center for Household Financial Stability at the Federal Reserve Bank of St. Louis, Dr. Karama Neal, President at Southern Bancorp Community Partners, and Kathy Webb, Executive Director of the Arkansas Hunger Relief Alliance. Thank you all for joining us today.
Thank you.
I want to start with Ray and ask if you could really tell us a little bit about the Center for Household Stability and what trends are we seeing in terms of wealth inequality across the country? I know you all do a lot of work around data and research. And so any insights you can give us there, and how has COVID widened the gap for our most at-risk families when, again, we talk about wealth inequality?
Yeah, thank you, Kara. It's a great pleasure to be with all of you today virtually, and appreciate the opportunity. So I direct a center at the St. Louis Fed, which of course Arkansas is in our district. And the center was established after the Great Recession to look at wealth and wealth inequality. I think many of you know the Great Recession was what we call a balance sheet recession. Too many families had too much debt, too much wealth and home ownership, not enough liquidity or savings. And that ultimately brought down families and the economy. So we thought we need to look at balance sheets proactively. Why does wealth matter? Why does it matter for families and the economy? So that's what we study, is wealth and wealth inequality. Kara, I think the trend is unfortunately clear. Wealth inequality has gotten worse in the last generation. there's more wealth at the top and basically less for everybody else. Right now, according to the most recent data, which just came out a few weeks ago, actually, through 2019, so not yet capturing the pandemic. 30 years ago, the bottom half of the population had 3% of the nation's wealth. They now have just 1%. Okay, so it's not the trend is not good. You're talking about a half of the population with 1% of the nation's wealth. But I think we don't want to just focus on the overall gap because it doesn't really give us a lot of insights that we can work with. How do we direct our resources in our communities? And so what I do want to give you is 3 insights from our work that we hope is a little bit more helpful to communities and foundations and policymakers. So the first thing I'd say is that wealth is overwhelmingly accruing to older, white and Asian, and better educated Americans. Okay, the gap between them is growing. Between them and everybody else is really growing. So these demographic drivers, your age or birth year, your education, and your race and ethnicity really are fueling wealth inequality in the US, okay? So the second insight is that the folks on the bottom, the ones who are not doing well, younger families, less educated families, people of color, women, they actually did see their wealth increase from 2016 to 2019. This recovery actually did reach the families that are struggling the most. That's great. Blacks and Hispanics, for example, actually saw meaningful increases in their wealth since 2016. However, what I really want to point out, though, is that you can talk about the gap and you can talk about these increases, but ultimately, it's what the wealth that people have to live their lives that actually matters. And so I think we really need to focus on, what levels of wealth do families have. So Black families, a median net worth of $23,000, Hispanics, $38,000, younger families, $24,000. So, think about trying to achieve resilience and upward economic mobility when your wealth is only $20,000 or $30,000 compared to $100,000 or $200,000. For families that are not at the bottom. So I think the big point and my final point here is that it's really worry less about the gap and worry more about, the actual levels of wealth that families have to actually live their lives. And, COVID, unfortunately, we don't have data yet that fully captures the impact. We only have data through June. But I will say this, COVID is hitting hardest the families that were already vulnerable to a downturn. So we expect wealth inequality to get worse.
Thank you for that, Ray. And I think that sets us up for several of the questions that we have for our other speakers, thinking about the wealth inequality and our most vulnerable families who are in that bottom percentage. Karama, I want to switch to you really quickly and Southern Bancorp Community Partners, which you lead, is the nonprofit partner of Southern Bancorp. And you all focus on asset buildings, programs, savings, particularly from a public policy perspective. One of those things that SBCP has recently been talking about is this idea of COVID debt and looking at the different types of debt and challenges that are inhibiting our Kansans' ability to build wealth. What are you all seeing in terms of short and potential long-term impacts of debt on families who are experiencing a tough economic situation during the pandemic?
So thank you again for organizing this important conversation. I'm glad to be a part of it. I think it is nice to follow Ray on this question, because the issues that we're seeing with debt right now are built upon a foundation that was already inequitable, that already had significant challenges. Before this, we have a report, and I'll put the link in the chat box so that everyone can see it, on debt that was actually written just before the pandemic started. So it doesn't include that data, but even at that time, it talks about how Americans had the highest amount of debt they've had ever, even adjusted for inflation. So when you start off in that situation, and then you get in a situation where people are losing hours, people are losing work, people are unable to work, there are childcare issues, there are, in addition to public health issues, right? In addition to just whether or not you're feeling well and able to go to work, that just exacerbates what was already, frankly, an untenable situation. I'll also put a link in the chat to the Sergo Foundation's work on what's called their COVID-19 Community Vulnerability Index. And what that does is it looks at a county by county level. It's a really interesting map, looks at a county by county level across the United States to show what counties are most susceptible and vulnerable to the economic, legal, educational, other kinds of impacts of this public health crisis. And so what you find there is that, the places that, when we initially found this, Arkansas was not in the place, it was not sort of a hot seat for coronavirus, but Arkansas and states around us, many of our neighboring states and areas, are in fact extremely vulnerable to coronavirus because we don't have the same kinds of systems in place. You don't have the same kinds of supports in place from a public policy perspective, from an operational and organizational perspective, to help people recover from the kind of economic shock that this pandemic is creating. Other places might have had even a more severe economic shock, but also had more resources to help their families, their communities recover from that. So as we think about debt, I think it's important for us just to recognize, this is happening on an uneven playing field from the beginning. The timing of the coronavirus, I was writing in my notes, I say, quote, helpful. It did come at a time when people had just received oftentimes their tax refund. The stimulus payments helped, the increased unemployment insurance helped. So initially folks were, there were a number of people who recognized this was going to be an issue, but it was not immediately hypercritical, but it is becoming such because a lot of those kinds of funds that were available are no longer available. And so what we're seeing, for example, in our housing counseling services, typically people who already owned a home were maybe 15% of our housing counseling clients. That's now up to about 50%. And so what that's suggesting is that people who already maybe were stable, had a home, were doing fine, are now not doing fine. And in fact, when I talk with our counseling team, what I find from them is that it's often those folks who are most challenged in some ways. I would say most challenged, are very challenged because that challenge is new to them. Folks who have been struggling all the time, who've already been vulnerable to economic shocks. It's not a good situation. It's something we definitely need to fix, but it is familiar. And so those folks know where to find a food bank. They know how to find those kinds of things, whereas a lot of other families have, this is new to them and they're trying to figure that out. And so, organizations that are part of the Bank on Arkansas Plus Coalition, particularly that plus part, are really well positioned to help families, regardless of their income level, regardless of their assets, find those kinds of tools. So, I think the debt piece is critical to that. It is something that's going to remain critical because of the long-lasting nature of the economic impact of this pandemic.
I didn't prep Karama and prompt her for that question, but it literally ties into your work, Kathy. So thank you, Karama, for setting that up. And to Karama's point, Kathy, I'm pretty sure most people on the call are familiar and have seen the drastically increased numbers of our Kansans who are experiencing food insecurity, including individuals that you guys are probably seeing who we've not seen before. So can you give us a little bit of insight of what that looks like on the ground? And what are you hearing from these families about their financial situation as it relates to maintaining and supporting a household budget?
Thank you. We appreciate the opportunity to be here today. And I'm glad I was third because I do get to follow up some of the things that Karama and Ray hit on. And I want to start off by telling about two families that we've had the opportunity to talk to. We have a 1-800 number, excuse me, that folks can call, and we help them sign up for SNAP, Supplemental Nutrition Assistance Program, formerly known as food stamps. And one of the callers was a senior. He was still employed. He's worked hard all his life. He's a veteran. And early on in the pandemic, he got laid off because he's a custodian at a church and his church quit meeting in person. And as we went through the questions that we have to ask to sign people up, and we asked him about his assets, he said, just a minute, let me check my bank account. There was a pause. He came back on the phone and he was overdrawn. He's never received assistance. That was his situation. A second call was from a young family. It was a couple, male and female, who had been saving their money to move to a better apartment, to get married, to start a family, and they had saved about $3,000. They both got laid off within a week of each other. And when they called to ask us about SNAP benefits, our SNAP outreach worker had to tell them, because of Arkansas policy, they had to spend down that money that they had worked so hard to save before they qualified. Laura's going to get into that public policy when she comes on later. Those are two families out of hundreds that I could tell you about. To give you a couple of statistics, we thought that this year was going to be the first time that I could come to panels and say, for the first time since the recession, we have dropped the number of people in Arkansas who are struggling to access food to levels below the Great Recession. Obviously, I can no longer say that. And through a variety of surveys and data from Feeding America, we project by the end of the year that food insecurity in general in Arkansas will have increased 5%, but food insecurity among children will have gone from 23% to 32%. Think about that. That's almost 1 in 3 kids living in a family that doesn't have enough to eat. And to frame that in just a couple of different ways, we rank near the top in the country for families who say their kids aren't getting enough to eat because they can't afford it. 1 in 3 Arkansans say that they're having trouble covering their household expenses. SNAP usage has increased 24% in 6 months. And during the recession, it took 17 months for SNAP usage to increase that much. And just 2 more things before I turn it back to you. To your point and to some of the things that others have said, the charitable network is seeing a huge increase in people accessing food banks, food pantries. And at the low end, we have a food bank reporting that out of the people who are coming, approximately 25% of those are folks who've never accessed a pantry or a food bank before. And at the high end, we're seeing 50%. And something I think that you mentioned, or I'm not sure, it might have been John, on average, 28% of American workers are seeing fewer hours. I think one of y'all referenced with nonprofits the fewer hours, but in the Black community, among Black workers, 38% are seeing fewer work hours. So I won't go into any more statistics, but that's just a brief overview of what we're seeing.
Yeah, and I thank you, Kathy, and I appreciate that perspective, because I think sometimes when we do talk about the numbers, it makes it hard for people to connect to the on the ground stories that you told, right? And so as we're watching, back to Ray's point, kind of a little bit of this wealth inequality widening, we're seeing impacts happening to the most vulnerable, but the middle vulnerable. And the way that we respond in this crisis is going to have short and long-term effects. So we really all need to be thinking about what are some of the things that we can put in place to help people kind of navigate this. So Ray, Kathy brought up a great point, which was about savings and assets and having things that having, you know, some money in the bank. And one of the things that we do know is how important and key even a small amount of savings can be for families. So I think, there's some recent data, and I don't want to name a name because I don't remember where I read it, but I think it says like $250 to even $300 in a family's account, can help. Certainly not with a major pandemic like this, but just on average having some funding available. So tell me, how do we, for a lack of better word, capitalize on this moment, right, from a federal, local, state policy perspective, to support building safety nets and promote emergency saving opportunities? I think Karama talked a little bit about tax time, but even some of these other things, because we do know that some people are managing to save during the pandemic. So can you talk to me a little bit about that and safety nets and the importance of continuing to build emergency savings and growth?
Sure, Kara, thank you. So yeah, just a couple of comments. I mean, I think, look, your private savings, your emergency savings is like a private safety net, and we should build those up, but it's no substitute for a strong public safety net. So first and foremost, we really need to strengthen that. I think the CARES Act was a great response. We need to do more of that. So there's no substitute for that. We have to strengthen that. We need to reform it. We need to update it, and we need to get rid of asset limits. So let me just be very clear about that. Having said that, I think there's a lot that foundations, policymakers, nonprofits can do to help families build up their emergency savings. You are right about the research. I'm really amazed by this, actually. I'd say 5, maybe 6 studies, including a couple of our own, looking at financial insecurity, upward mobility, resilience, have all pointed to the same conclusion. No one intervention is more important than helping families building up some sort of an emergency savings buffer. Okay, the studies are remarkably compelling, and including 2 studies we did, one on food insecurity and one on just trying to predict which families were most vulnerable to any kind of an income shock, whether it's a pandemic or a hurricane. Emergency savings came up as like, nothing predicts that more strongly, than whether or not you have some sort of a cash buffer. So trying to build that up is probably the single most important thing we can do to promote resiliency and upward economic mobility. A small amount of savings, as Bob Friedman wrote in his book, can really leverage a lot of opportunity, starting that small business, getting that skill, the down payment on the home. So I think it is important, to note that emergency savings does serve both of those functions. Finally, let me just say, I think, there's all kinds of strategies. There's what you can do at tax time, tax refunds, although those might be a lot less next year because of the CARES Act and the pandemic. FinTech, digital savings and apps are showing some promise in building this up. Employers really can start an emergency savings fund. They can link their 401ks to something called a sidecar emergency savings, so that rather than rating your retirement account, which is very costly, you have a little buffer of emergency savings that links to it when you need that funding. Banks and credit unions, financial coaching, we're not lacking for strategies. Okay, we're not lacking for good strategies. We need to do more than what we're doing. But again, just to underscore that we can't put this all on families. The public really needs to do its part.
I agree. Thank you, Ray. And I will say that one of the things that we, are committing to doing at Bank on Arkansas is promoting some of those strategies. And you're absolutely right. It's there's no one fit all solution, but if we're all working towards that same goal of emergency savings, that's really the key in the outcome. So yes. So Karama, I want to, before I jump to Karama, I do want to remind people that you can put any questions that you have in the chat box for any of our speakers. So as we are nearing towards the end of today's conversation, we can answer a few of those. Karama, I want to go back a little bit and I want to talk about rural communities, just because I know that Southern Bancorp is doing a lot of work in rural areas, particularly as it pertains to small business. And I think we've all heard the news stories that have talked about some of the racial disparities as it pertains to minority business owners being able to access capital. I want to hear your thoughts on what are we seeing in our rural areas in Arkansas in terms of access to capital, job growth, and financial stability, and again, particularly in rural communities.
Yeah, so I think this, this is a really critical question. And what we find is, particularly when we think about, for example, small businesses and what their role is really across the country, but certainly in rural communities. Small businesses are the job generators. They're where people have jobs. They're also where people increase their income. So even if they're not employing anyone other than themselves, they're able to increase their income and have the resources that they need. And having people working is actually really critical to small businesses, right? So particularly in rural areas, I've heard talk about grocery stores in rural areas that were it not for people having stimulus that they're able and SNAP, as we've heard earlier, to able to go buy food at the grocery stores, those grocery stores then are not able to hire their workers, keep their workers on, continue to operate the hours that they do, and provide those jobs. And so, when we think about the role of these kinds of businesses, these entrepreneurs, particularly in rural communities, where it's a smaller, by definition, a smaller number of people, those ties are just incredibly important. And one of the things we've seen, we think about access to capital, particularly with regard to those businesses. Again, these are oftentimes businesses where the individual is their personal credit is their business credit. So those businesses are fully dependent on that entrepreneur's, that business owner's ability to finance that work. So, that becomes really critical when you're looking at something like, we've heard a lot about the PPP program, and Southern Bancorp Bank, our partner, has done a lot with that, as have numerous other institutions in getting those funds out. I can speak on behalf of Southern. I know that, they did some very, very small loan. I think the smallest PPP loan they did was $200, all the way up to more than $4 million. So, I mean, the wide range. So really trying to get to some of the smaller businesses. That said, those funds, because of how they were structured, were not available to all business owners. And so you had a lot of sole proprietorships, a lot of, gig workers, other folks who are small business owners who were not able, for any number of reasons, to access those PPP funds. So, part of what we did at our organization was raise grant dollars. And so we were able to provide 123 $1,000, what we called business continuity grants, to businesses that represented about 321 jobs. And we targeted, I mentioned the COVID-19 Community Vulnerability Index. We targeted counties that were most vulnerable according to that index. And so, providing those kinds of funds really is very critical. And sometimes you think, okay, $1,000, how could that be critical? How could that make a difference? I'm reminded of our director of finance, and the woman who does her nails, who owns that nail shop, was just so grateful. She was one of the ones who was able to receive this grant. She was so grateful that $1,000 paid for the PPE that she needed in order to reopen her shop, right? That is the kind of thing that can make talk about small infusions in a strategic time, small infusions of capital at a strategic time. It's not solving everything, but that infusion of capital at that particular time allowed her to open her shop back up, allowed her to be able to open for business. And so, being really thoughtful about capital, and I really appreciate that you said access to capital. I think sometimes it's really easy to default to debt. We've been talking about debt already. Sometimes a loan is important. And it's critical, but I think it's really, I was remembering at a talk one time, and someone said it's sort of obvious, but I appreciate that he articulated. By definition, a loan takes out more money out of the organization than it puts in, right? Because you're paying interest. So by definition, you're taking out more than you're putting in. Because of the time period, that can work really well for some organizations, but for some, that does not work out, taking out more than you put in terms of dollar amount. And so thinking intentionally about grants, thinking intentionally about, we do match savings account for small business, also for home ownership and home repairs, think about match savings accounts. We're starting to think intentionally much more about equity. Are there ways we can make equity investments? What are the kinds of ways we can look at all sorts of capital, the range of capital that's out there, and invest it into small businesses, into families, into communities, so that they can really build their wealth and be in a position where they can be stable, and to our theme here, can be resilient when these economic shocks happen. They happen to everyone. They're going to happen. We can't predict exactly when, but we know they're coming. And so it's important for us to plan as a society for when that happens.
Go ahead, Ray.
Well, Kara, I just wanted to reinforce a really critical point that Karama is making about the importance of equity financing and capital and less on debt. In our study of trying to predict which families were most vulnerable to any kind of an income shock, a hurricane or a pandemic, the first was, of course, lack of emergency savings. Second was having debts that are too high relative to your income.
Again, me reading a study, I saw something recently that said it was talking about credit scores and how people's credit scores have actually sort of increased during the pandemic, but it's because people have become more focused on, I have to pay off my debt with any income that they have coming in, because the first thing that comes to mind when, to your point, Ray, when you're experiencing some sort of natural disaster and or issue is, man, I owe these student loans, I owe this mortgage, I owe this thing. So I think that not saddling people with more debt from loans, but again, to Karama's point, figuring out this breadth of capital and ways that we can infuse this capital is important for all of us to keep in mind. Agreed. Thank you, Karama. Yeah. So speaking of infusing small pieces of capital, Kathy, I want to go back to you because I know you're no stranger to the legislative arena. And, a year ago, if somebody had said to me, well, everybody's going to get $1,200 or more in a stimulus check, I would have said, likely not. But, we are in a different time. This is a different era. And now we have really started down the road that could lead us to the path of larger conversations about things like UBI, which again, universal basic income has been piloting in different places across the country, but hasn't really been a serious conversation until now, where everyone is looking for stimulus funds and that we're probably on the cusp of maybe possibly seeing a second round of stimulus as well. So I want to ask you, you talked a little bit about the barriers in terms of asset limits, and we talked a little bit about the barriers in terms of families, needing these access to small infusions of capital. But what are some other barriers that families face in accessing local support programs, and what can we do to help make the process a little bit less cumbersome? Go ahead.
And one of the things I've always liked about the Hunger Relief Alliance is that we focus on the multiple ways to attack hunger and the underlying conditions of hunger. So we can look at this from both the charitable food network arena, and then we can look at it from what you just mentioned, the stimulus checks, the federal safety net, and I think Ray talked about the federal safety net. And so at the Alliance, we would look at it from both of those perspectives. And I want to preface this by saying that in Arkansas during the pandemic, DHS has been very supportive. USDA, which is the U.S. Department of Agriculture, has been very supportive. We work closely with the congressional delegation to make sure we have waivers in place to accomplish things. And then I will add the but we also have spent a number of years making it more difficult for families to access benefits, to say people shouldn't have benefits and those kinds of things. So quickly on the charitable food network part, transportation is a huge issue. It's a huge issue in rural Arkansas, but it's also an issue in urban areas where people might not be able to get to a place where they're giving out food boxes or distributing food. And for folks who are working in one or two low-income jobs, that same place where they're giving out food might not be open at a time when the folks can get there. And then a third thing, which we don't think about enough, I think it's very important that a family that has low income should be able to access food in the same way I do, and that is have choices, have quality food. And so sometimes the food that we have is not culturally appropriate. It might not be the best food. And I have heard some people say, well, you should just get whatever you're given, and too bad. That's definitely not the attitude that we have, and that troubles me. So those are just a few of the barriers that we face with in having people access food. Obviously, we could talk about food deserts for a week, but that's not really what we're going to talk about. Then in terms of public policy, as I mentioned earlier, and I think a couple of people have touched on it, Laura's going to talk about asset limits and how we need to change that policy. We have spent the last 4, 6 or so years making it more difficult for people to access SNAP. And in the recession, one of the first things we did in a bipartisan way was to increase the amount of SNAP benefits that people received. And it was John McCain's economic advisor who talked about the quickest way to get out of the recession is to increase SNAP benefits. Well, we and our partners at the national level and hunger organizations across the country are still saying we've got to increase SNAP benefits, because that's money that flows not only into the hands of those who need food, but to the grocery store, the farmer, the dairy farmer, and the hardware store, because that's money that goes into the community. And SNAP benefits, those dollars are spent, 98% of them, in the first 30 days. So what do we need to do? In January, we need to change some public policy at the state level. We need to work at the federal level to change public policy. And we need to take this as an opportunity to do some of the things my fellow panelists have talked about, and not punish people, yet figure out how to strengthen the federal safety net and not punish people.
Again, I didn't purposely set that one up, but thank you for that thought and those ideas, Kathy, and to all of the panelists. And so I do want to ask you all kind of, as a question for all three of you, Karama touched back on that the theme for today is resilience. And so we really want to talk about some of the issues that are happening, because it's important to set that context, but we want to provide solutions for attendees that are on the call and individuals who are working in this space. So what role do you believe that programs like Bank on Arkansas Plus, or through our coalition of community partners, what role can we play in helping Arkansas families to recover financially as we continue to navigate our way through the pandemic? And so I'll do Ray and Karama and Kathy. I'll let you have the last word, if that's cool.
Well, I've said some of this, of course, already. I think doing everything you possibly can to promote emergency savings through employers, through grants, through nonprofits, through tax time is really critical. That you can help employers set up these funds. I think, that would be really critical as well. I think the debt relief agenda, just to emphasize what Karama was saying, is critical. Some sort of debt relief would be really important, including student debt relief. Up to $10,000 for all families is a number that a lot of folks seem to be coalescing around, which would really, I think, really go quite a long way. So, but don't ever forget the basics of just having a safe, affordable bank account either. Without access, there's no asset building. It's really that simple. I'm very encouraged by all the great developments with Bank On, the national standards, the widespread adoption of that. And I think the more banks who embrace that agenda, I think the better for wealth building overall.
Yeah, I'll just follow up with that. I mean, absolutely agree about the bank on accounts. I mean, what we're seeing, particularly now, as people are getting stimulus checks and as they receive those, is that was a real opportunity to talk with folks about these kinds of bank on, certified accounts, that can in the end really save money. You're not paying fees for money orders and those kinds of things. You have access to web banking. I mean, just sort of things that a lot of folks might take for granted, that have not been able, that other folks have not had access to. This account really provides that in an environment that doesn't allow you to, overdraft your account, which, is not trivial for a lot of folks. And so that's really critical. It was I remember being in the conversation, we were starting Bank on Arkansas and really being intentional about that Bank on Arkansas Plus coalition. And I think that plus piece is part of what really helps address your question, Kara. When we think about the wide range of organizations across our state, representing every area of our state, all the demographic groups in our state, who are thinking intentionally about how to build financial resilience, how to build economic security, how to build economic mobility in a wide variety of ways, from policy and practice to, practice and policy in various different areas. I think that's a real way that, the Bank on Arkansas Plus Coalition can really help in this work. So whether it's, credit counseling, debt management, our group is starting an Arkansas Savings Coalition where we're talking very intentionally about public policy and practice in savings, both at the state level and the municipal level. I think sometimes there's a real opportunity there to work at the municipal level, in the city and county level, where many of us have real, I'm looking at our city director now, many of us have real influence around what happens at the city level, particularly in rural areas where you can really make a difference. Can that to Ray's point earlier, can that municipality decide to use direct deposit to pay their employees? Can that county decide to provide us an option to have their paycheck split? So, $200 of every paycheck goes in this one account that you forget about, and that's your emergency savings, right? These are things that municipalities, that's a policy work, but it has a real impact on people, on families. And in communities, particularly in rural Arkansas, where the municipality, the city government might be one of the primary employers, that has significant impact, not just on those employers, but sets a precedent, sets an expectation for what other employers might be able to do in that area and what other municipalities might do across the state. So I think the breadth of the Bank on Arkansas Plus Coalition, the breadth of the people, the organizations, and the people that are involved, and the work that we're doing, how we're doing that work, I think can really help address that. And so I think it's a real opportunity, particularly right now, given that so many people are paying attention to these issues in ways that, frankly, they weren't a year ago.
One of the biggest changes I've seen in the hunger relief area over the last 5 to 7 years is that we've expanded the circle of people who talk about it in 2 significant ways. And that is, we have the healthcare community significantly more involved because we make the relationship between hunger and health. And we have the education community more involved because we see the relationship between hunger and education and how that suffers. And pre-pandemic, we were starting to work with Bank On, we were starting to work with Southern Bancorp, we were talking about asset limits. And one of our big focal points was going to be working with those organizations, talking about ALICE and other things in the upcoming legislative session. And in my mind, sort of this third new component for hunger relief, adding to healthcare education, is this financial component, the banking component, Bank On, and all the things we talked about, putting that into context and getting the relationship between all the things that we've talked about more visible for policymakers to make those connections to real people in our communities. And I think that can be incredibly significant as we move into a recovery phase sometime, hopefully in the next 18 months or whenever that starts. So thank you.
I want to touch briefly on Kathy's final point, which is about the connectivity. And so I think you're right. And I think everybody has kind of touched on that. That's really the strength of the Bank on Arkansas Coalition, is it is connecting all of these pieces that you talked about, Kathy, and all of these organizations. And so we're much stronger together because we're all working towards the same goal. It's just about finding the pieces of the puzzle that fit and making sure that they mesh. So thank you all for those thoughts. I do really quickly want to touch back on two questions that I kind of saw come up in the chat. And Ray, I know you already touched on this, but can you talk a little bit about that emergency sidecar that goes with the 401k? I think somebody touched on it, and then you put some information in the chat box, but just really briefly, can you talk a little bit about what that emergency sidecar is?
Yeah. So, something like 25% of people raid their retirement accounts, which is penalties, taxes, and lost wealth later in life, very costly. So the point was, attach an account that people could raid that doesn't involve all the taxes and penalties and lost wealth. So you build up an emergency savings account that's linked to it. And, it's kind of in the experimental phase right now. They're trying to figure out, is it linked automatically? Do the deposits go back and forth automatically? There's all kinds of things that researchers are trying to figure out. But that's sort of the basic idea, is that while you're building up your retirement savings, you're also automatically building up your emergency savings so that you have it when you need it. And I think it's a more fundamental point too. You can do this on housing and mortgages too. So what if you were to escrow an emergency savings while you're making your mortgage payment, right? And so, so that when the roof breaks, which it will, you've got the money there. So I think the big insight here is you need to get the balance between the short-term and the long-term right. And if you got to put it on autopilot, and you want to link the short-term and the long-term, whether in a mortgage product, a retirement product, a college savings product, whatever it might be, because if you don't get the short-term right, you're not going to get the long-term right.
I love that, Ray. I love the idea of mortgages and other things that could have helped me as a homeowner. So
I hope your bankers were listening to that.
The other thing that I just wanted to note is that Jamie Ginocchio and Karama have dropped in the chat if you or a member of your organization is interested in joining the Savings Coalition, which sounds like it is really on the cusp of doing some wonderful work. And I agree with Karama. We cannot underscore the importance of our local municipalities and working to find solutions there. I know Bank on Arkansas is a partner with the city of Little Rock in providing some financial coaching and financial education to City of Little Rock employees. And we've certainly seen the benefits of that work. So absolutely. So I want to say thank you to each of you for joining us today. And I want to remind everyone that you can find more information out about our panelists and their organizations on our event page. I think we had the link, if you scroll back up to the top of chat, and there it is again, perfectly. So we're going to, please keep your screens on. We're going to view a short video from Cities for Financial Empowerment Fund. Cities for Financial Empowerment Fund is the organization that houses the National Bank On program. And it also partners with local communities to improve the financial stability of households. So we thank CFE for their continued support, not only for our program, but also for supporting Bank On nationally. And then following that, immediately, we'll have a short break, and feel free at that time to grab some coffee. Please keep your screens on, and then we will return with our next panel discussion, which is Alice in Arkansas. So thank you.
Hi, good afternoon. This is David Rothstein from the Cities for Financial Empowerment Fund and the National Bank On program. Listen, we want to offer a heartfelt congratulations on another very successful year for Bank On Arkansas Plus, one of our most favorite coalitions to work with, and I'm not just saying that. They cemented their place in my heart ever since I went to the Capitol Hotel in Little Rock, one of my most favorite places to ever be. But in all seriousness, congratulations on working with so many financial institutions, nonprofits, regulators, and partners to continue to expand banking access. You're one of the first state coalitions that we've ever worked with, And part of the excitement of having a state coalition, for us at least, has been to see how you have brought in so many different partners from all different sectors, whether it's a nonprofit organization doing workforce development or financial education, or even United Ways that represent some of the smaller cities that are outside of Little Rock. We also want to congratulate you on having the most financial institutions with certified accounts of any of our coalitions out there. We have enjoyed working with them, Bancorp South, Centennial Bank, Citizens Bank, Iberia Bank, Wells Fargo, US Bank, Up Federal Credit Union, Southern Bancorp, of course, Simmons Bank, First Security Bank, Bank of America, Diamond Lakes Credit Union. All 13 have accounts that meet the Bank on National Account standards. Also, we are simply thrilled that our house, nonprofit out of Little Rock, was able to integrate banking access into their programs. And that was a big part of our pilot work a year and a half ago to see if we could take banking access and integrate it into workforce development programs. Part of the success of that, of course, was not just having these great accounts and working with First Security Bank to do that, but also it's been really successful to see clients succeed in these accounts. I also would be remiss if I didn't thank Abby Hughes-Hosklaw, Darren Williams, Karama, Neal for starting the coalition, and then, of course, in their great wisdom, bringing on Kara to continue the work of being the coordinator. I remember sitting down with Abby and the folks from the Federal Reserve Bank, and of course Darren and Karama, to really plan out what this could look like. I never anticipated that it would become an entirely state coalition, not a city coalition, and I certainly couldn't believe that we would hit the heights that we have. I also wanted to call out and offer special thanks to the Little Rock Mayor, Frank Scott Jr., who not only attended our Bank on National Conference and spoke with other mayors about how important banking access is to not just people in the community, but for those that work for the city. Mayor Scott has continued to be a leader in this and integrating banking access to city programs, whether people are getting payments from the city because of COVID or whatever it might be. That leadership has been incredible and really something that we've spoken to other mayors and county executives about. This has been a strange year. Obviously, it has been. We would be doing this in person otherwise. But again, congratulations to Bank on Arkansas. We are thrilled to support your work through resources, funds, and partnerships. And you're off to an incredible start with 13 financial institutions that meet the standards. We'll challenge you to double that in next year's time. Thank you again for letting me speak, and congratulations on a wonderful event. Take care.